it was a $530,000 purchase price, and we put $30,000 down. They took back the $500,000.
What is up, you guys? Matt McKeever here with Jon Kepler again. And so we're going to be talking about a topic that I know every single one of you is going to be extremely interested about, because I'm interested about it. I haven't done anything actually with vendor take-back mortgages, and yet they're kind of the holy grail when it comes to investing. Everyone hears the term VTB and naturally gets excited. Jon, you've done multiple VTBs at this point, right?
We've done several. Yeah, I'd actually have to think about how many. I've lost count.
Let's just kind of maybe dive in first, if you don't mind explaining to the audience, if they're unfamiliar with what a vendor take-back mortgage is, just kind of break it down for them, what it is and why a vendor would even consider doing it.
A vendor take-back is simply a loan from the seller of real estate so that you can use that money to buy the real estate from them. You might think about why you would need one of those in the first place. The straight answer, the most common answer I think, is that not all people have down payments ready to go. So much of the time, banks want you to put 25% down, or depending on the property type, sometimes 35% down. And so a vendor take-back is probably the most widely known creative strategy in order to close on properties that you otherwise couldn't close on.
Why would a vendor be okay doing this?
Well, that's the question everybody asks, because especially in very hot markets, people say, I'm not even going to ask about vendor take-backs. The vendor is selling, presumably, or to these buyers maybe clearly, that they want all the money. You know, they're selling because they want all the money. Clearly they want all the money, so we would never ask about that in the first place. But that's not true. People sell for a variety of reasons. They sell, and when they're in strong or weak positions. If they have no need to sell, they might still be tired of the management. They might be wrapping things up or going to cash. Everyone is at a different point in their lives. Some people want to just tie up, frankly, some people want to simplify their investment portfolio because they know that they're not going to live for 20 or 30 more years, and they want things to be simple for the next generation. So go to cash, keep it clean, get rid of assets that are, from their perspective, a potential headache or at least a lot of work. And then another reason, frankly, is that if they sell and they get all the cash, it's quite a tax bill in 1 year. There's a large capital gains bill. Using a vendor take-back allows them to defer that over a few years and make it a little more palatable for them, so they don't have to write one enormous check to the government.
Yeah, and so that's really big. Here in Canada, essentially the way it works is you can defer your capital gains as long as you are taking back a portion of the mortgage. There's a bunch of complicated details we won't get into in this video, but essentially you can defer, 20% over 5 years. So kind of think about it that way, that you only have to incur 20% of that capital gains in the first year, the second year, third, fourth, and fifth. And so depending on your tax bracket and depending on the capital gains that you have on that property, that can actually be really powerful. As well, it's just at the end of the day, that vendor take-back mortgage can also be an investment for the vendor, right?
It is an investment, yeah.
So is there a typical look to the vendor take-back mortgage that you're doing? Like, is there always a certain interest rate, or is it dependent on the deal?
Typically, it will be for a minority of the purchase price. So if you are going to the bank to get a first mortgage and you don't have your 25% down, perhaps you have 10 or 15% down and the vendor will do the rest. So that's less than 50% of the deal, maybe 10 or 15% of the deal. And the interest rate is all over the map because they might look at it as a risky second mortgage. If you were going to a mortgage broker or getting a loan from a professional lender, they might want to price in the risk. On the other hand, you're buying this property from this person, you're solving their problem. So if they are doing well on the purchase, you might be able to get an interest rate that's well below what you pay on the open market, because the thought is that they're profiting from the sale and the purpose is not to profit significantly from the interest. We can go into the different types or the range that we've done personally, but generally speaking, the primary way to do it, the frequent way to do it, is to get a small portion of the purchase price, from 10, 15, even 25%, and try to line up the interest rates somewhere in the middle, where they're making some money, but they're not making a killing because they're making the lion's share of it on the sale.
Do you bring up this to the vendor? Does the vendor bring it up to you? You kind of hinted at it earlier that a lot of people are scared to even make that ask or suggestion about the vendor take back. How do you approach that?
Yeah, so as the buyer, it's got to be you. It does. It's just something that you have to get comfortable with. I have seen vendors propose it, and they are in dire situations. Now, if someone's motivated, that can work for you. But by the time a vendor thinks to actually write it in their ad, or by the time that they solicit you, they have, frankly, every investor has already picked over it. I've never seen a vendor bring it up to me and have it be a deal that I found workable for me. They're usually unsaleable for one reason or another, and it's, again, maybe you'll get lucky, but I found it's better to stay away. So we have to bring it up. So what it comes down to is whether or not the vendor is familiar with the concept, whether you have to engage in some education, or whether you're basically just poking them and reminding them. So we've noticed that a lot of older investors actually remember when vendor takebacks were more prevalent back in the 80s and 90s, especially in this market.
And that was a lot because it was a lot harder to get a mortgage back then, and interest rates were significantly higher, right?
Exactly. Interest rates were enormous, and especially beyond a certain threshold back then, like commercial financing just wasn't what it is today. I mean, lending in general just wasn't as prevalent. So it was the way certain people just had to operate. Again, especially people who had a business of being a landlord rather than owning one duplex on the side and working a job. The people who put full-time effort into it when the banks weren't really there to support them decades ago would do this just as a matter of course. So one of the more recent vendor takebacks we did, it was such an easy sale because we just proposed the concept, and his exact response was, I haven't thought about that in a while. But yeah, we used to do it. And there was no objection at all. But he wouldn't have done it if we didn't ask.
And so how complicated is a vendor take-back mortgage? Are you just writing it into your office of offer of purchase and sale? Are you going to a lawyer and getting them to draw it up immediately? Or is that something that just happens once the broad strokes of the agreement are in place?
There are a couple of different ways to do it, and some of it is based on what the vendor prefers. You'll find when you get talking to different vendors that they all have preferences and things that they, strangely, things that they care about a lot and then don't care about at all. Maybe to you, it's all kind of the same, but everyone has their kind of pet clauses and so on. So we just go to our lawyer. Usually they're registered on title. Sometimes, especially with our business having the momentum that it does now, sometimes we're able to do promissory notes and not register on title. But that's because of our track record and the fact that a personal guarantee from us at this point carries a lot of weight because we have a lot of revenue from our various properties.
And do you mind just breaking down for the audience, what's the difference between a vendor take back and just that promissory note?
So in theory, a vendor take back is a loan from the vendor. So if you're borrowing money from the vendor, I think that it qualifies in terms of the general concept. But typically, it would be registered on title. So if you were to fail to pay the mortgage, the lender would then be able to take the property out from under you, sell it, and satisfy themselves, make themselves whole. And it's their security, it's their guarantee. If this is your first time hearing about this, that might sound horrifying. It might sound especially excessive. But the truth is that that's how you secure a deal. Banks are certainly going to do that if you get a first mortgage from a bank, universally. And that's the bottom line. These are not unsecured loans like credit cards or something, at least not in general. And they need their security. That's the process. And ultimately, that's something that your lawyer works out. It's relatively straightforward. With the promissory notes, we've been able to avoid that at certain times because, again, our personal guarantee means something at this stage. And these are people who sometimes we have existing relationships with. We've done deals with them before. There are some costs to registering on title. Also, if someone registers on title in a certain position, it means that someone else can't. And so sometimes to keep properties freed up and to ensure that we don't register too many things on them, an investor will agree to just take a promissory note. But that is technically unsecured. Again, that is our word that we'll pay them. And there's a certain level of comfort that you have to have between you and the vendor in order for that to happen.
Yeah, absolutely. Do you find that you need to be persistent and bring it up multiple times, or is it usually if you bring it up once, it's either yes, no, and that ends up being the case regardless?
A certain amount of persistence can help. I think if you don't get a positive reaction the first time and you're not sure that you can continue talking, don't be overly persistent, don't offend them, but wait. The idea is that in any real estate transaction, it has to be the best deal available at the time for the vendor and for the buyer, or no deal. Every deal is supposed to be the best deal at the time for all parties, and that in theory, that's why all the parties agree. So if you present a vendor take-back offer, and the vendor says, no, I don't like that for whatever reason, you could give them a chance to see if they can find something better. And at least in our market, we found that in many cases they can't. So perhaps they were hoping to have all the cash up front. They don't truly need it that much though. So we give them some time to consider their other options, and then they realize that it's still the best way to proceed.
One thing I want to talk about first of all is there's really no one right way to do a vendor take back, right? There's a broad spectrum, as we kind of talked about. And so sometimes you can really play around with those terms, and that will change the nature of the deal. So what I've seen, at least other people in my network do, is sometimes the vendor maybe has an unrealistic price expectation. However, what's most important to them is getting the price that they want. Whereas the idea of maybe taking back either a first or a second mortgage at extremely favorable terms or extremely favorable interest rates, they might not have an issue with, because they're really focused on that one aspect of the deal, which is just getting their top dollar, right?
Exactly, yeah. I really can't emphasize enough how important what Matt just said really is. Everyone has what they want out of the deal. Think about it. If you're buying a property, what do you want out of the deal? You probably want some cash flow. I hope you want some cash flow. Maybe you want some appreciation too. So what does the vendor want? A lot of vendors want nothing but their sale price. It could be an ego thing. It could be that they were hoping to buy something else with the money down the road. It could just be what their spreadsheet tells them. They just really want to get a certain rate of return from their purchase to their sale. Again, everybody has their angle. So yeah, if they're committed to their purchase price and their purchase price is unreasonable, your alternative is to walk. So rather than walking, at least figure out how to give them what they want without hurting yourself. So this is a great way to play with the spreadsheets and see if you can actually give someone their crazy number without it truly costing you overall.
So recently, Adam Martin, who you guys have seen on my channel, he was talking to a vendor that was looking at selling a semi-detached home, and the vendor wanted $225,000, which was pretty much exactly fair market value. And so Adam came to me with the deal, and I said, oh, man, that's, you're maybe making $5,000 in equity buying it at this price. I'm not really sure if there's a deal there. And then shortly afterwards, the owner messaged him and said, hey, actually, I'd be willing to sell you 50% of the property with this complicated thing. And anyways, long story short, we ended up finding the opportunity where the vendor was willing to sell it to us for $240,000. So we ended up offering $15,000 more than he originally wanted. However, he was willing to do a 15-year mortgage at 3%. And so for us, all of a sudden, that drastically changed the numbers. And maybe it wasn't a great investment today, but assuming the appreciation either of just the rent or appreciation of the underlying property, that potentially in 5, 10, 15 years, because we've been able to lock in such a low interest rate, that actually took something that wasn't a deal at all, and we were able to turn it into a deal. So I just kind of want to highlight that for you guys, the importance of creativity when it comes to vendor takebacks. And a lot of it just comes down to starting that dialogue, right? Exactly. And so even kind of moving beyond that and talking about other creative opportunities, you can sometimes get the vendor to take a second mortgage, and it may not be a vendor take back in the sense it's on the initial property, but it could be on a different property you own.
Exactly. Yeah, and again, I keep repeating this over and over, but every vendor has their perspective.
Yeah.
We did one deal. It was a $530,000 purchase price, and we put $30,000 down. They took back the $500,000 as a first. And it was a nice open conversation. We just said to them, you're selling, why are you selling, what do you want to do with the money? They believed strongly in self-management, and they said, we don't want to self-manage. I don't know if the concept of a property manager had even occurred to them, or maybe they just didn't believe in that concept. Again, they all have their perspectives. So they said, well, we don't want to manage this thing anymore, so we're selling. Well, what are you going to do with the money? Well, we don't know. We are actually kind of afraid of what we will do with the money, because they have this opportunity that comes with risk. If you have all this cash, what do you do? What if you do it wrong? What if you lose it? What if you trust the wrong person? Mm-hmm. And so we said, well, do you want to continue making a reasonable return on a first mortgage? They did. So they took back $500,000.
Yeah, so I think we probably talked long enough about vendor takebacks, but I know that this was an amazing video, guys. So smash that like button, jump in the comment section, and just thank Jon for being on the channel, for diving this deep into it, because it's a subject matter a lot of us hear about or overhear the term of vendor takeback, but often when you first get into investing, it's kind of that, that great white whale. You hear rumors of it, but to actually finally meet someone and hear their story about how they actually go about approaching it, I think is extremely valuable. I know I wish I would have met guys like you when I first started investing, because it definitely would have opened my eyes to the ability to get creative, the ability to really make things happen by just listening to the vendor story and being cognizant of what Jon's been stressing here, that just figure out what their pain point is or what their main focus or their main goal is, and tailor your offer and tailor the opportunity around that.
If I can mention another thing.
Yeah.
More than 10 years ago, I was listening to podcasts. I don't even think they were called podcasts at the time, but I was listening to conference calls. And I heard that people were doing vendor takebacks. And I thought, these guys are Americans. I have no idea if this works in Canada. Even though this was 10 years ago. At that time, I thought, these are getting to be old conference calls. Some of these calls are recorded 3 years ago, and people are talking about deals that they did 2 or 3 years before that. And I thought, it's unlikely that I'm going to be able to benefit. And back then, I didn't have a lot of money, really any money, and I thought, how am I going to make myself successful with a strategy that could be dead? So I did one vendor take back, and then I thought, I'm lucky, this is great, I'm so much farther ahead financially, I'm going to really use this to benefit myself in the coming years because I got lucky this one time. And I did it again, and again, and again, and now I've lost count. And now it's more than 10 years later, and we have one firmed up right now. We just did it like 2 weeks ago. So they're not over, they're still happening. You just have to ask.
Absolutely, and I think that's a great way to end this video, guys. Smash that like button, hit the subscribe button if you're new to my channel, and definitely check out Jon on Instagram, and hopefully in the near future you can check him out on IGTV as well.
Sounds good.
Thanks, guys.
Thanks.